everybody, or good morning, depending on whether you've had your lunch yet. Welcome to ICB TV. This is episode number 162, and today I'm very pleased to say we have a very special Technical Tuesday. Very special because we have a lot of very interesting guests. We're going to have a great panel discussion. Even more special because I'm not running it, because other people are doing it. I'm just part of the panel, and I'm here to answer your questions and field everything that comes across. So I think to get us going, I'm going to introduce our host for today, somebody that those of us on the panel know quite well. This will be your first experience of Richard, and I have to say, you've got a good experience coming. So welcome to ICB TV, Richard, and you're going to take over now and introduce everybody. So welcome, Richard.
Brilliant. Thank you, Jackie, and welcome everybody. So my name is Richard Sargent. I run a business called Principal Point that works with vendors in the accounting sector who are developing products and also helping to try and create solutions for accountants and bookkeepers. And one of the big challenges, as we know, that's coming up facing the profession and lots and lots of very small businesses are making tax digital, kicking off in 2023. There are already lots of questions being asked by accountants and bookkeepers who will be at the sharp end of helping people make those transitions and also building sustainable services in the long term. So today we're going to spend some time with our guests looking through the headline requirements, and we'll try and attempt to clarify some of the points that are in the foremost of people's minds. And we've taken these from member feedback, but also by scouring the internet and knowing what the kind of common questions have been asked at the moment. We're going to spend a bit of time going through them today with our guests, who are, we have Verna Gellvear, who's the Customer Readiness and External Stakeholder team in Hmrc. We've got Steve Worrall from SW Accountants. Welcome, Steve. Jacquie Mount, of course, who needs no introduction, but VP and Director of Technical Policy here at ICB, and Chris Downing, Director for Accountants and Bookkeepers at Sage. So welcome, everybody. Just before we dive in, I would like to encourage all who are watching today to ask as many questions as possible using the chat facility, which is at the bottom of your screen. And I think what's going to happen is Jackie's going to field some of his questions as we go through, but also it'll just give us some other information that we can pick up and ask things as we go along through the session today. So ask all the difficult questions, because those are the ones that Chris and Verna love getting. Right, to begin with, right, Verna, let's start with you, shall we? Can we start with, just give us a recap, if you will, the reasons why MTD for ITS are coming in. What's the rationale behind Hmrc's?
Yeah. Hi, thanks, Richard. And I love the way you encourage everyone to kind of ask Chris some difficult questions. Nightmare, isn't it, Chris? So thank you, first of all, for inviting me to speak to the bookkeepers today. I do really enjoy speaking to this audience, and I do a lot of work for bookkeepers. So you've probably heard me speak about making tax digital before. So to get back to your question, Richard, why are Hmrc doing making tax digital? Yes, a question I ask myself often, but worthwhile repeating, I think.
Well, I hope so.
Why are we doing this? Keeps me in a job. Right, so it's really to try, and obviously there are benefits to Hmrc. I'm not going to lie about the fact, there will be benefits to Hmrc. What Hmrc want to do is try and reduce that bit of the tax gap that kind of businesses make by the fact that they make errors and transposition errors and things like that. So if we can reduce that bit of the tax gap by encouraging businesses to kind of keep their records as close to real time as possible, to keep their records digitally, and also provide like quarterly updates, we think that we will be reducing that bit of the tax gap. I think that's mainly through the digitization as well. And I guess then, and really, I should perhaps have said about that, we think there's benefits to businesses of doing that as well, that we think when people digitalize their records, that they will have more of a holistic or a real-time view of what their tax liabilities will be in real time. So you don't get that huge tax bill at the end of the year for your self-assessment. Also, then again, it comes back to, we think also if you digitalize your records, you will stop making those errors. And hopefully there's this make tax less taxing. Hopefully if you kind of digitalize things, it means that you're not spending that the business aren't spending that day at the end of the month, the end of the quarter, end of the year, kind of trying to type all their records in and taking time away from their business to do that. That we think if you digitalize it, you can do it more as you go along, and that gives you more of an opportunity to concentrate on growing your business kind of further. So that's it from a HMRC's point of view, Richard.
Yeah, and also remember you saying before that you've got a personal perspective on this as well, haven't you?
Sorry, I didn't know.
Clients, haven't you?
Yeah, before. I didn't know. Sometimes and people have heard me tell this story, so I don't know if it gets a bit boring, but I've been in HMRC for the last, I think, 25 years. And I started off in HMRC as a VAT inspector. And I can honestly say, hand on heart, that of all that, I went out and visited a lot of SME businesses and the smaller kind of end of the spectrum. And I can honestly say, hand on heart, that the amount of assessments that I raised would be from businesses who were just making, or business people that were just making mistakes. They had no intention of defrauding the VAT system at all. They really did want to pay their VAT on time and correctly, but they'd just taken the wrong figure over to the wrong page, or they put a decimal point in the wrong place. So, you know, I think if we can stop businesses doing that, it gives HMRC the opportunity to then kind of move people away to tackle the people that are evading or avoiding paying tax, rather than the businesses out there that are trying to do it right and just making mistakes, by eradicating those mistakes, Richard.
Well, thank you very much for that. That's great. And also, I suspect that's the easiest bit for you done today. I hope it gets a bit more challenge for you. I no doubt it will ramp up.
Yes, I always think I should make my introduction longer and longer.
Yeah, right. Nice try. Nice try. Nice try. Okay, perhaps we can turn to you now, Chris. Can you give us the headline requirements? What's going to be required? What are the responsibilities for accountants and, of course, their clients?
Yeah. So when you think about MTD for its happenings, basically from 2023. The key facts are that self-employed businesses and landlords with an annual business or property income above £10,000, and when I say income, that's turnover, that's sales, will need to follow the rules of MTD for income tax, of which these rules are still being, let's say, being signed off by HMRC, so we'll know them for definite by the end of the year, hopefully. And therefore, from the 6th of April 2023, businesses will have to maintain their accounting records digitally. So digitally can mean an Excel spreadsheet, but we've considered, let's say, maintaining them in a cloud bookkeeping solution is better, is more efficient. But also these records need to be structured in a way that they'll basically a light profit and loss account will be shared with HMRC every 3 months via the software. But also as part of this business update every 3 months, you should also have the ability to actually submit other allowances and adjustments if you do want to throughout the year. But really the important thing is that the 4 quarterly updates will be finalised with something called an end of period statement, a 5th return, again, via software. And then this will all be wrapped up with a final declaration, which is effectively the self-assessment tax return, which we have got to used to over the last 25 years. So really, this is a massive change for the industry. It's changed in terms of actually how much of our clients need to operate, but also getting a better understanding in terms of those new reporting deadlines, which we seem to be bombarded with more and more often these days.
Great, thanks, Chris. I'm sure we'll dive into some of the detail of that as we go through. So let's go to Steve. Steve, you're a practitioner, you're working at the sharp end with clients. You've already helped people presumably through MTD for VAT. What was your clients' experiences of that? And what's on your agenda? What's on your horizon when you're thinking about 2023?
Yes, with the MTD for VAT was, I'd say, was a smoother process than MTD for ITSA that's ahead, mainly because obviously the clients were used to filing VAT returns on a quarterly basis. So it was more a case of sort of training them and getting them into line in order to make sure that they were using the appropriate software, going through the process of signing them up through the agent services accounts with HMRC and have everything in place. That proved to be a bit challenging at times, but most of the clients seemed to sort of come on board with that and accept the way ahead was really just to adopt the processes that we were recommending. The software companies were well prepared for that, so people who were already with an existing software provider were able to just move on to MTD software at the time, and it proved to be the case. So we didn't have a large, a huge problem with clients now, that other than the hiccups at the start, really, which was sort of getting them sort of used to making sure that we had the information, so that when we were ready to hit the button and send the returns in, we were satisfied, that the client was satisfied that we'd been provided with everything. Yeah. I think MTD for ITSA will be a little bit more of a challenge, because of, as Mr. said, the deadline date's slightly different. We don't get the additional 7 days, and also it's getting them into the habit of moving on to a quarterly reporting basis, for their personal income and income tax, as opposed to the once-a-year job, and sort of staggering it through the year with the rush at the end of the year. I think that's going to prove to be more challenging, definitely, for the practice.
Okay, great. Well, thank you. And again, I think we'll dig into some of that as we go through today. And finally, Jacquie, if you don't mind, can you just share some of the experiences of your members? How do you compare the challenge of MTD for VAT compared to the looming challenge of ITSA?
Well, I think I'll really echo what Steve has said, is that if you've already got a VAT registered business, there shouldn't be too much more information or work that you need to do, apart from trying to liaise the returns for VAT and the returns for ITSA. And there are some other issues there, but I think they're still being sorted out. So possibly not too much additional work for the VAT registered, but for the non-VAT registered clients who are going to be coming on board with this, there's going to be a massive sea change here. They've literally got to change the way they work. This basically means that for all of those that fall into the category with the income over £10,000, what we all lovingly know as the paper bag brigade flies out the window. It's no longer an annual paper bag, it's a quarterly paper bag. And there's been a lot of discussions going on around the social media recently about increased costs and that sort of thing for the clients. Now, we're not going to get into that particularly today. The other thing, I think the challenge is going to be the number of reports that there are going to have to be, particularly for VAT registered businesses. Hmrc did at some stage in one of the meetings we were at sort of mention that they're hoping to try to link the returns together to try to cut down the actual number of returns that you do. And I think the other challenge is probably for those businesses for whom our members don't offer a service and who work on their own and do their own self-assessment tax returns. Yeah. That's going to be a massive change for those. And I think there is a huge possible new set of business out there for our members, trying to pick up these people who are going to need to come to get some help from somewhere, and who hopefully will use the software but come to ICB for some help. So hopefully some additional business for us that we can do within what we currently do. So I think that's the challenges for ICB members.
Yeah, great. Thank you for that. Okay, so the bulk of the webinar today is going to be focusing on asking for responses to some very specific questions that we've sourced from accountants and bookkeepers. So what we're going to do is I'm going to start off each time by asking Verna for her response, and then I'll go around asking our other panelists just for some feedback. Please do keep asking questions. I would say the Q&A section is open and it's nowhere near as busy as we'd expect it right now, okay? So please get your fingers out, ask all those difficult questions. That's what we're here for today. So Verna, are you ready?
Yeah, let's go for it.
Okay, number one, the classic really. Will spreadsheets be allowed, even with bridging solutions?
Yeah, so it's lovely to hear Chris from Sage mentioning this, because I know sometimes, I feel that there may be a reluctance from software providers to mention this. So yes, from a Hmrc point of view, again, this is a question I get asked an awful lot, but yes, spreadsheets are an acceptable way of keeping your records digitally, if that's what you want to do. And I know that you will have some clients out there who will be really happy to know that they can still keep their records on a spreadsheet. That just means that you need to be able to get your records information from that spreadsheet to Hmrc via an API. So you need some kind of form of bridging software, or the spreadsheet itself needs to be API enabled to be able to get the information to Hmrc. So yes, spreadsheets are a long-term solution for Hmrc. So you don't need to keep your records in a cloud-based or singing or dancing software system. However, I am going to put, so that's the kind of the good news. And then I am going to put a caveat on that. And I am going to say that I used to be one of those people that went out and said, you know what, keep your records on a spreadsheet, because I'm really not that techie kind of or digitally inclined. But I think it is worthwhile saying that if you do, or if you have got clients out there that do still want to keep their records on a spreadsheet, that they won't be getting the benefits that I talked about earlier, the full benefits of making tax digital. So it's still going to be onerous for them. They're still going to be typing those figures into the spreadsheets. They may well actually still be making mistakes. So really, as much as you can digitalize your records, I would advise you to do so. However, if you do still want to keep your records in a spreadsheet, that's absolutely fine. You can continue to do that.
Okay, thank you. So
Actually,
Chris,
Richard, oh, sorry, Richard, can I just come in there? Because there's a question on our line from Paula, which probably is linked into the sort of spreadsheets and software. Can paper files be kept and entered manually onto the software, or does each receipt have to be scanned into the software? So that's sort of linked in, because you're obviously not going to be able to do that if you use the spreadsheet.
I think that's the same, Paula, as we had for MTD for that. And there was this kind of, misconception that everything needs to be digitalized. You need to keep everything, digitally, and you don't. So no, you are quite right. You can keep paper invoices, and you can type them into, for example, your spreadsheet or your computer system if you want to. So that's not a problem at all. However, that does come back to, if you think about why Hmrc are implementing Making Tax Digital, it is because if you could scan those invoices, if you could use your bank feeds and things like that, then we would, that's going to give you a whole more benefits, a better experience of Making Tax Digital. So hopefully that helps, Jacquie.
Thanks, Verna. Chris, I mean, she's almost like doing a sales job for you here. There must be something else for you to say along this, aren't there? But I mean, the serious point is, though, that spreadsheets do need to continue to be an option for some clients, don't they? But that's not the whole story here.
No, I think it's looking at the practical aspects, because I agree with Jacquie. This is a massive opportunity for bookkeepers to get involved with it, because even if you haven't been responsible for the self-assessment journey with the clients you work with, maybe the accountants simply do not have the capacity to deliver this type of work. And therefore, it's a case of thinking those clients who need the support. And clearly, if you've got clients who are on manual based and you use to an Excel spreadsheet, that's part of the journey. But let's be honest, using a bridging solution for an Excel spreadsheet for VAT is relatively straightforward. It's literally a couple of boxes, it's a couple of transactions. Trouble with it, this is like a mini profit and loss account. So if you imagine you've got 20 transactions need to be categorized to a category code, which we're familiar with in a self-assessment tax return. Then that needs to be either sum-ifed or pivot tabled. Then that needs to be bridged. It's complicated, and therefore errors may creep into it. Hence why an Excel spreadsheet is a perfectly suitable digital solution, but it's not practical, possibly, to save time and ensure that the accuracy of the records are coming through. Hence why we need to be thinking about how we always work with our clients to meet their compliance needs, as well as in terms of supporting the end of year compliance exercise as well, because it's all about saving time throughout the whole of the year, not just at certain filing points.
Great. And Steve, let's kind of throw this one over to you then. So I'm thinking about you and your clients. Are you going to be offering clients a very straightforward, one-stop shop solution, or are you going to have to chop and change with different types of clients having different needs and requiring different kinds of services and tech?
Well, I think the classic really is for anyone who's in our industry is to know the client. So the first thing that we need to do, that we're in the process of doing, is effectively a practice profile, so that you identify the clients, you identify the new clients that will fall into the system that aren't currently maintaining records digitally, and you set yourself a timeline so that you can start informing them of the information that's going to be required and the activities that they're going to have to undertake in order to meet the compliance needs. So we're at a stage really now where we've got effectively a practice profile where we can identify the clients and start that process off and write to them to tell them that they're going to have to start adopting the new process, and then following on from that, inform them that yes, we have the facilities in place in order to assist. So the clients that do keep the manual records, the paper bags that you do see only once a year when you're actually preparing a set of year-end accounts, and obviously if they meet the criteria with with their income levels, with the turnover and income levels, are going to have to be sort of guided through this process through ourselves to say, we will be seeing you 4 times a year. You will need some assistance on this, and yes, come to us if you want the guidance. We can offer the software, we can offer the service. Just as Jacquie has said, the opportunity is there for us to take on more and more work. Okay, the clients have got to be informed of the additional costs that are going to be there. But yes, it's a process.
Steve, just to dive into that just a little bit more, I guess the question I'm interested in is, if some people want to use spreadsheets and some people want to use a Sage product, are you going to be happy to accommodate that, or would you just say, look, we just want everyone to use product A?
Well, we've got to make sure that the client is happy with what the client wants to do. We will try and steer them in the same way as Verna and Chris have said, really, more towards the software that will actually tick all the necessary boxes to produce the mini P&L accounts. So yeah, if the client is adamant that they've always used spreadsheets, will want to use spreadsheets, and the resistance is there, then we're on a little bit of a mission in order to to convert. But yeah, we'd have to adopt the client and work with the client in that aspect. But we will certainly try and get the clients more and more moving over to using the software that will produce the reports in the format and the standard that's required with the legislation.
Right. Brilliant, thank you for that. Let's move on back to you, Verna, if you don't mind. So another great classic as well. So will there be free software from Hmrc?
Right, so Hmrc are not going to provide any software, but there is a commitment that there will be free software for MTD ICB, but it won't be from Hmrc. So we're really looking to the software providers out there. And I know there'll be people, there'll be bookkeepers on this call that go, well, that's not going to happen. There won't be free software, but we did see free software. We did see free bridging software for MTD for that. So really hope that the industry will be able to kind of provide free products for those, certainly with the most basic kind of tax affairs. So yes, there is a commitment from Hmrc that there will be free software out there.
Is there any understanding what the basic tax affairs are, Verna?
Very straightforward. Yeah, and I know, because you do pull me up on this. I did actually look for a definition, but yeah, just those. They're very straightforward.
Very straightforward.
Very straightforward tax affairs.
Chris, what's the looks like different questions there. So what kind of, will Sage be ready? I guess we've got one question here from one of our viewers here saying, will Sage 50 be compatible? Can you just give us a bit of an update on what Sage are hoping to offer here?
Yes, Sage will undoubtedly be ready. And therefore, the challenge which we have today at the moment is getting the fine detail correct. Because actually, digital record keeping, that's what we do best. Digital filing, we've had the experience over the last 10, 20, 30 years being ahead of the game, even with CIS reverse tax. We had that built and ready back in October 2019, 18 months earlier than what it was required. So when it comes to the ICB filing reporting, yeah, we'll have that sorted. But I think the key thing is then understanding that digital journey from, let's say, products like Sage 50, making sure that actually clients using it have a really nice experience when they're filing with the returns. And it's a funny thing, having a nice experience filing tax return, but I think that's important. We need to make it easier, needy, visible, provide the understanding. But yes, certainly, Sage is all over this, as you can imagine.
You got to be careful you don't fall into the trap of over-promising here, Chris. And that of making your tax return an enjoyable experience. I think you're pushing the bounds there a little bit. Jacquie, let's get, not Jacquie, I beg your pardon. Verna, can we go back to you as well? Another one which was a big issue during the VAT process was agent authorization. So will you have to sign up for ICB too?
Yeah, so if you have clients that are on your old online services agent online services account, your legacy account, you can, as similar to as you did with MTD for that, you need to copy those relationships across to your agent services account, and you can then sign them up for MTD ITSA because you already have that authorization in place. So that was a very similar process for MTD for that. However, Richard, we have improved the process. So HMRC kind of, we do learn from feedback that we get from people out there. It's just our learning might be a little bit slow now and again. So for MTD for that, it was a bit of a horrendous for agents out there who had a new client who wasn't on their old account. You had to really rely, well, you did have to rely on your client themselves to sign themselves up for MTD for that. So we've learned, and for MTD for ITSA, you can send your client a digital authorization to act for them from your agent services account, and also within that request is to sign them up for MTD ITSA. So when they give you permission to act for them, they also give you permission to sign them up for MTD ITSA. That authority to act for them, to sign them up, remains in your agent services account for 4 months. So you don't have to act on it straight away. You can bank them and think, okay, I'm going to wait till they all stack up, and then I'll sign them all up at once, kind of thing. So hopefully that should make the process for agents a little bit more easier for MTD for ITSA. And it's probably also worthwhile saying, Richard, is that I know there's a big ask from agents out there that HMRC provided a bulk sign up function for MTD for ITSA. And just to let you know that unfortunately we did look into trying to deliver that for agents, but we couldn't because of, and I know it's this age, and I hate it when people say it to me, GDPR, that we weren't able to do it, but also because we wanted the data, the integrity of the data when we first got it from agents to be correct. So we think if we gave a bulk sign up function, that people might make mistakes when they're uploading it in bulk rather than when they're doing it individually. But what we are doing, sorry Richard, to make the process for sign up a little bit easier for agents is you can start signing them up from April next year, your clients up from April next year. That doesn't mean that they have to submit MTD ITSA updates. They don't have to do that till they're mandated, but you could actually start signing them up from April next year. And also we're going to pre-populate some of that sign up kind of journey. So hopefully it won't be, you don't have to type loads and loads of figures in to sign them up.
Great, thank you for that. And it's interesting, so we can join as of next April, but we don't start until the following April. Or
yeah, and that's different from MTD for that as well, because MTD for that, the bookkeepers will know out there that once you sign them up for MTD VAT, you were then committed from that word go to submit MTD VAT returns. That's not the same for MTD. So you can start signing them up from April next year, but they don't have to do quarterly returns to the following April.
Great, thank you for that. Steve, did you have any grey hairs come out when you had to go through signing, get your agent authorization sorted out for MTD for VAT?
Yeah, well, the few that I have left, yeah. I mean, if I wouldn't mind a full head of grey would be a better start. But yes, yeah, we did. I mean, jumping through the various hoops when we had to sign them up and get them all on board, and having to get clients to dig out their old VAT certificates and find out when the effective date of registrations were and everything when we were signing them all up, en masse, at the start. Yeah, it did prove to be, a task, but we got there. I mean, and HMRC also have been helpful in terms of helping us get through that process at the time. So, but no, on the whole, the MTD for VAT was quite a smooth process. As I say, a lot of it really was because the clients were already in a system where they were having to, commit to get the information to us, on that quarterly basis anyway. I do think the problem that we've got with ITSA, with MTD for ITSA, is educating them that we're going to need the stuff a lot sooner. So I think there will be quite a few more grey hairs appearing when we go through that process. But the thing is, we're starting early. We've got, as Verna was saying, we've got another 6-7 months before we can start signing up. We've got 12 months then to get them signed up before they're actually committed to doing anything. So the timeline is there. We've got a lot of time in order to get everything in place, so that by April 2023 we should be there. Famous last words.
I'm going to ask you a question here, Steve. So you're starting to talk to clients about it now.
Yes.
Are they listening?
Well,
Are they listening?
The process. Well, we haven't. When I say we're starting to talk to clients, as we are doing self-assessment tax returns, obviously, we're in the process of doing self-assessment tax returns for 2021 at the moment. The 21-22 year will, is on the same format. So now is the time to start saying to clients, as we're asking for the information, you do realise that you fall within the category of having to submit your self-assessment tax return for 21-22, but also for 22-23, we need something in place because we will be doing the quarterly reporting. So it's laying the foundations really at this stage so that the client isn't shocked in another 12-18 months time when we start saying we need to do this now. You've got to do it. They're being informed in advance. I mean, we are a little bit, on a bit of a mission, as I say. We're sort of the messenger to a certain extent here. The HMRC's, publications are out there, but with the best one in the world, a lot of our clients will see something from HMRC. Some will read, but a lot of them will just pass it on. What does this mean? We have an education function as well to fulfil, really. There, in this, for the process.
Great, thank you. Jacquie, did you want to come in on that?
Yeah, not so much on that one, but we've got some threads of questions coming through that I think are linked to this. One, I think, is the actual process of uploading. Now, Verna and I have had this conversation before. We've got a lot of people coming through saying that they can do the quarterly returns because they do the VAT returns and they do the bookkeeping, but they don't actually do the year end. And that's going to need 2 agents to do that, our members to do the quarterly returns. Now, we do have an issue with this. I'm in the process of discussing this with Verna and HMRC, and we're looking at it. At the moment, we have an issue, don't we, Verna, with an agent doing the quarterly returns and a separate agent doing the year end, but we are looking at that and we are trying to come up with a solution. And I think that's probably all we can say at the moment. Verna, is that correct?
Yeah, so the issue, it's probably worthwhile explaining, I guess, what the issue is that one client can't sit on 2 agent services account for the same tax. So it could for VAT and MTD ITSA, but if you want 2 agents to act for you for MTD ITSA, your record could not sit on 2 agent services account. So this cropped up, I think, Jacquie, didn't it, as a talk we did recently, I think one evening, wasn't it? And it was just like we were just sitting on like a suit, and I just thought, gosh, that can't happen. So yes, we've taken it back to HMRC, and Jacquie and I are trying to work through. We need to try and get that worked out before really the introduction. Right. So
Chris, did you want to come in on there?
Yeah, I just want to add something to that. So Verna, when you're making that lovely request to have more than 1 agent, could we make at least 3? Because if you imagine you've got a lot of people now having to do their 30-day CGT filings, and that filing may be performed by 1 accountant for maybe multiple individuals, and then really they need an agent service account. So I think generally the ability to have multiple agents is going to be very useful. So I'm just making that request now, if I may, please. Thank you. Brilliant.
Okay, let's move on. Verna, is she still there? Okay. She's frozen. Well, hopefully Verna joins us back in a second. Let's kind of move on anyway. Chris, here's one that you might be able to help us with here. Multiple sources of income. We need updates for each source. And this kind of goes into some of the questions that we've been asked as well from some of our viewers today in a variety of different ways. But this all comes back to this idea of multiple sources of income. What's going to be the requirements there, Chris?
I think the easiest way to explain this is if your client today is filling out multiple supplement pages on the self-assessment tax return. So they have a trade, so they're doing SA 103, and they may have another distinguishable trade. They're doing another supplementary page. That is where an additional bookkeeping solution or general ledger or source of record will be required. But also at the same time, the other frustration is the fact that if you've got a trading business and you've got some rental income on the side, that would also need to be a separate submission. So in a simple world, you're going to have 4 quarterly returns, an end of period statement, and a final declaration. In a not so simple world, and it's becoming more popular, the way you may be having a trade as well as rental income, you're going to have 4 quarterly submissions for your trade, 4 quarterly submissions for your rental income, an end of period statement for the trade as well as the rental income, and then your final declaration. And that's where it becomes a little bit more complicated. And then really becomes complicated in terms of those clients which have rental income and they have shared property ownership. Because potentially I may own a property myself, I maintain some books for them. Me and Richard, we're quite pally. We have a little buy-to-let to each other, so we have a set of books. However, I have a responsibility to file one quarterly return. So therefore, I need to combine almost 2 profit loss accounts from 2 bookkeeping solutions to make one return for the rental income. However, hopefully we'll have some clarification in terms of what that journey looks like when Hmrc drops the main legislation towards the end of the year. This comes down to some of that sort of customer journey, getting the right experience right. It's dependent upon what the legislation has to say.
Verna,
actually, Richard, sorry, I was just going to say there was a question about that, a follow-up question, because it's saying why haven't Hmrc publicised this more? But I think it's partly because the legislation is still going through. We're still very much in the developmental stage, aren't we, Verna?
Yeah, that's fair to say. I think, you know, the advice has gone to ministers and we're waiting for it to come back. And when it comes back, you know, I think you'll then see a flurry of activity. And I wanted to come on something that Steve said before about, you know, it's very much, I think, agents having to talk to their customers at the moment, but I'm really hoping that Hmrc will start with our comms fairly soon and that we will take a lot of that weight off your shoulders and hopefully go to your clients first. So they're coming to you with information rather than you having to go to them, really. So, you know, I'm hoping that, I think certainly for MTD, it's MTD, compared to MTD VAT, that hopefully will be better communications that go out through various channels.
That, Verna, don't worry, we're going to come to that.
Okay.
So Steve, let me ask you something on there then. I mean, on the surface of it, it seems like, you know, moving from an annual accounting process to a quarterly update process, increasing the number of reports from 1 to at least 6. I mean, that's the easy story. For how many of your clients do you think will fit that program, and how many of them will be more complicated than that?
How many clients will fit? I would probably on a percentage basis. I mean, I say it's all the clients that we do self-assessment tax returns for. Obviously, we use software to file all the self-assessment tax returns, so we can identify those, you know, from the client list that we hold on the software database that's there. And I would say that it's probably around about 50 to 60% that will now fall in to the category of requiring the 4 quarterly reports and obviously the end of year and the final declaration reports that are going to be there, which the tax software providers, you know, will also provide, as well as, you know, talking to the bookkeeping software providers as well. In terms of actually letting the clients sort of know that they're going to have to do this, or that we're going to have to let them know that the process is going to be changing, that we're going to need information sooner. Of that 60%, at least 3/4 do not at the moment have the requirement where we would be seeing them on a quarterly basis, because just as Chris has said, we've got clients that are directors that have self-assessment tax returns that need to be prepared, but have a buy-to-let or a share buy-to-let. People who are partners, not so many these days, but partnerships, and again where there's also property income that's there. And I must admit, it's the landlord aspect where we've got so many people who have invested in buy-to-lets over the last sort of decade or so, that are going to suddenly find that that they're a heck of a lot more involved, or we're a lot more involved in communications back and forth with them. But again, it comes down to so what I was saying before. Really, it's identifying those over the next 6 months, certainly until we get to the signing up process being available. That's important for us.
Just on that, Steve. I mean, a really interesting about landlords. Do you think there will be people out there who will fall under the remit of it without realizing, because they've got a bit of rental income? They might be retired definitely. And whatever.
Oh yeah, definitely. Yeah, there is. Yeah, I mean, it is a process. And again, I'm sorry, I'm sort of throwing the ball to Verna here. Is rely on it to get the information out, because definitely there are a lot of people out there who have relatively modest income, but will have a property and would therefore take them over the threshold that's required for them to sign up onto MTD for it. So yeah, without a doubt, and obviously for our clients, thankfully, hopefully we've got the information to identify the ones that are within our net. But yeah, definitely out there in the real world, there will be a lot. And I know Verna would probably be able to put more accurate figure on what the HMRC feel that number is.
Well, let's not put her under pressure right now.
Please don't. Searching.
Let me ask you a slightly different question then, Verna, if that's all right. Another classic. Is our quarterly updates a way of leading into quarterly collection of tax?
Yes, so that's something that obviously I get asked a lot, and as I always really hesitate because, I always say no, not at all. And then next week HMRC can change their minds. But as it stands here today, I am not aware of any, decision that is going to be made that means that people have to pay their tax, their self-assessment on a quarterly basis. That isn't really the remit of making tax digital. If you take it back to why are we doing making tax digital? So at the moment, no. I mean, obviously, yes, your VAT returns are in the main a quarterly payment, but in terms of your self-assessment, income tax self-assessment, that just the payment date remains exactly the same. I don't know, Richard, if it's worthwhile. There's a few questions on a similar note. There's a few questions about the dates for the quarterly updates. So 5th of August, 5th of November, 5th of February, and the 5th of May are the four kind of dates for the quarterly updates. There's just been a few questions on those, so I thought I'd get that in there, Richard.
Verna, sorry, Richard, there's also a follow-up question on that, on the different dates for VAT. Is there a plan that we can actually change the VAT quarter dates to match the ITSA dates?
Well, I mean, I guess you can if you want to. I mean, is that a good or not? Because that means you're doing all that work on your VAT and your ITSA at exactly the same time. But yeah, I mean, I'm guessing, I mean, you can alter your VAT return stagger if you want to, and if you wrote in to say you want it to coincide with your income tax self-assessment updates, I can't see why HMRC wouldn't let you do that, if that's what you chose to do. And again, that probably, Jacquie, is right. That would give, the business their tax liability, exactly in that quarter kind of thing. So I can understand,
I'm thinking by the time you do all your reconciliations for that anyway, that's almost what you're doing there. Because one other question, sorry, Richard, one other question on this area is what needs to be put up. Can it be cash or accruals accounting? Because the adjustments for accruals accounting can either be done each quarter or at the end of the year. So basically you could produce the same. And my horror story would be what Chris said just now about his most complex set of returns. If you then add another 4 VAT quarters onto that, it gets huge.
Yeah, exactly. And I mean, I don't want to labour this point, but just to remind you that the updates for the quarters are purely that. They are just updates. It's the end of year kind of accounting adjustments where you actually put your file, where you can make all those adjustments that Jacquie's just talked about, really. So the updates don't have to be totally 100% correct, because you will be making adjustments at the end of the year for your final kind of your final return.
Steve,
basically.
just between you and I, right? Okay. Verna said that it's not going to lead to quarterly payments, but do we believe her?
I'm listening, Steve.
I'd like to think so, because the clients are used to the July, January dates. They're geared up to that, have done for the last 15 years. And so, yeah, I would like to think that would be the case. I really would. It's down to the Treasury. How soon will the Treasury need the money? I mean, what I'm more, again, when the legislation is finalised and everything's actually out there, I'm more concerned, because Verna has mentioned, and rightly so, about the quarterly returns have got to be a best estimate, as accurate as is possible at the time within the limits, and so that they give it a gauge. It's that getting that across to the clients is going to be tricky, because we would like, obviously, them to be as accurate as we can. We don't want to have a load of adjustments to make, when we actually do the year end and when we finalise and do the final submission. But a client knowing that they can just give you some figures and say, well, revenue are quite happy to accept that, it's the best estimate. that's going to be tricky. I think that's an area where we need to try and convince the clients that, you know, it might be the case that a best estimate will be accepted or you know, at this stage as good as we can, but we'd rather have the numbers as accurately as we really can make them, so that we don't have, you know, something that bites us really at the end of the year or when we do the final submission.
Yeah.
I guess if I can just come in there as well, Richard, I don't know if it was on one of these webinars that we've been doing with Sage, and someone asked me, but what if we just put in nil updates? You know, we're not playing this MTD game. We're just going to, because you just say it can just be an estimate, or, you know, so we're just going to put in nil updates. What would be the kind of repercussions of that? And so that comes back to then your penalties and your behavioural penalties and your record keeping kind of penalties that would come into play if someone's going to do that. So I guess we think that if people are keeping their records digitally, which is part of the MTD process, it's just a case of you put those parameters into your software and then that files off what the update is for that quarter for you.
Verna, let's keep with me for just 1 second, then let's go to the next question. Will we be able to see the client liabilities and payments?
Yeah, again, yes. So I've just been on a talk this morning with agent service account colleagues. So yes, so there will be, and it's a viewer that you can access via your agent services account. So yes, you will be able to.
Chris, there must be an easy way to handle this and getting a client view of what's going on, because there's going to be so much data flying around.
Yes, certainly. And to be honest, Sage has experience of this, because when that good old agent service account was created back in 2019, the biggest pain point was, where's my client list? Now, fortunately, because it's API first, Sage built VAT Center. So as an agent, you could see all your clients' VAT returns, what's outstanding, what needs to be submitted, liabilities, what they paid, interest, hopefully not, all in one place, no matter what bookkeeping solution they've got. So you imagine with, let's say, the future of, let's say, tax generally with Hmrc, they're trying to get all their data into one place. So hopefully it'll make the lives easier for bookkeepers and accountants going forward, because all that information can be surfaced in a probably a more richer experience within the software, rather than having to do multi-factor authentication and triple passwords to get into the Hmrc agent service account.
I mean, it strikes me we've talked a lot about the end user client, but also when you can't forget that we'll have to try and build efficient back office systems within the practice as well, aren't we?
Yeah, and this is why MTD at the end of it isn't about digital bookkeeping. It's about business transformation for accountants and bookkeepers in terms of how they're going to operate going forward. And this isn't just about thinking about how you communicate with clients, it's thinking about how you engage them, how you price your services, how do you actually streamline everything within your practice? Because fundamentally, if you're going to spend 20 to 30% additional time on every client, where's that time going to come from? So thinking about how tools generally, or digital tools generally, can help support you in that journey. That's really what MTD is going to be about, an accounting firm bookkeeping practice the next 18 months, is thinking about your internal efficiencies and operations going forward. Great,
thank you. So thank you for the questions that are still coming in. Do keep them coming. We're not going to have a separate Q&A at the end, because we're incorporating these questions and your feedback as we go through. So keep them coming, and we'll try and answer as many as we go along. Verna, let's go back to you. This is an interesting one as well. Will there be more scope for digital exclusion, especially around age and ability? There's a concern, isn't it, that 3.5 million people represents a very wide range of abilities and inclinations and access to technology.
And it's a fair comment, isn't it? And I think that comes back to a little bit at the moment. The Hmrc, I agree, haven't put a lot of information out about MTD ITSA, but I would imagine that the exemption process or criteria will follow very much similar to MTD for VAT. So, and you know, that people did get exemptions for MTD for VAT. It wasn't that kind of it wasn't rare. You know, if you genuinely had a case where you could not comply for MTD, for example, you lived remotely and that your internet connection was really poor, or again, Richard, you mentioned age. Then we would, you know, and you can't comply. And it's also worth us saying, if you have got an exemption for MTD for that will follow through for MTD for ITSA. But, you know, in terms of like ability and kind of disability, we'd kind of be treating those people the same, because there'll be people out there who will have some kind of disability but will still want to comply with MTD for ICSA because they see that there are advantages to MTD for ICSA. So we are working really closely with the software industry to be able to provide products that that have assisted for those with assisted digital needs. Yeah. Did I answer your question? I think I did, Richard. I hate that. I have this feeling I did that bit of a politician answer, that I ramble and then I bore myself. And I think, yeah.
Steve, we're back to this idea, aren't we, that sometimes some people might not even know they're falling into the scope of MTD for ICSA, and it might have something to do with age, but there are also some people who will struggle in conforming to some of these requirements, aren't there? What should members be thinking about in terms of helping some of those people?
Well, first of all, identify them. So yeah, like you say, and I can straight away think of a few of the clients who at the moment, we'll only see them once a year. It will be a visit to the home address. It will be to collect the information and go back. If they're having to fall into the categories, you say, it will be quite scary for them. It's something that they aren't used to. So yeah, the practice again needs to identify. I mean, we're back to identify the practice. Look at the practice profile. Look at the makeup of the clients that you've got, and then start targeting those people who need to know sooner rather than later, so that they're prepared and the practice is prepared. And going back to Chris, we're having to look at the way the practice will operate over the next 2.5 years, because there's a lot of overlap. There are things that are going to be happening over the course of the next 6 months to sort of lay the foundations and get everything going. The 12 months then for the next, from March, or from April rather, 22, there'll be an element of signing up where we can. And again, it's keeping that information whilst preparing the course returns for VAT and doing the self-assessment tax returns as they stand. But then the following tax year, you've got that overlap where you will be doing self-assessment tax returns and possibly starting the quarterly reporting process. Yeah. And it's important that the practice, is geared up and ready to sort of take all those streamlines, those timelines as they go, because there will be a lot of element. There will be quarterly returns that will be going in before a self-assessment tax return has been completed for a previous tax year, and it's important to recognise that, really. But in terms of the client base, it's knowing the profile of the practice and knowing your clients enough so that you can get in touch with them now, inform them of what's on the horizon.
Thank you, Jacquie. I mean, I know we can have a separate hour just on this one conversation, really, but it strikes me listening to Steve talk there that inevitably the costs for clients are going to have to go up, aren't they?
I think it's going to be inevitable that they will go up. I think it's a question of how much they go up. There have been some really scary stories in the press about what the costs are going to be. But for our members generally, we're very conscious that our members tend to work quite closely with their clients, and they have a lot of the information there for them anyway. So the cost will probably go up, but may not need to go up significantly. For me, I think it's the individuals who are perhaps not represented or who do their accounts once a year with an accountant or one of our bookkeepers, because we have a lot of our members who do year-end self-assessment returns and don't actually touch the books. I have to say, I think that's where the costs are going to increase, unless there is a way that we can mitigate in this. But I think Steve said right at the start, I think it's getting in touch with these people and educating them that actually in the long run, it's probably going to be better for them if they can get their information, because I think we've got to sell it as an add-on to a business support service, that they will know more about their business as they go through the year than just perhaps having this horrendous, well, this is what your tax is going to be at the end of the year. So I think it's a question of how we've got to do a lot of marketing, as what Hmrc have as well. Once the legislation is in place, the software companies I know are going to be doing their marketing and things as well. I think we just got to all work together to see if we can keep this to as reasonable as possible. There is one question actually that's come up there. Do you think, the panel, do you think that this is going to force more people into limited company status to avoid this? It's an interesting one.
We start with Chris there first.
I hope not, because you should only incorporate if it's the right thing for the business to do. you shouldn't incorporate because there's a change in legislation. You should do so if actually it's the right thing commercially for the business, and also in terms of generally taxation, is it the most efficient method? And you're just delaying the inevitable, because I could talk about MTD for hours, and we've got the MTD for corporation tax coming in April 2020. So it's like, why go through all that hassle when actually you want simplicity? So there will be a drive, but actually you need to look at every client on per client basis, see if it's the right thing for them to do.
Great, thank you for that, Chris. Right, I'm conscious of time, and there's at least 2 more questions I want to ask Verna, 5 minutes. So I have to make this one snappy. Nice easy one for you here, Verna. Is there a client communication plan from Hmrc? Last time we felt it was all on our shoulders to let clients know.
Yes, there's definitely a communications plan from Hmrc, and trying to get away from just doing the brown envelopes that people don't answer as well. So yeah, there's definitely going to be a far wider communications plan from Hmrc. Comes back to, I think, Steve's comment about landlords. We're trying to think about how we can reach out to them. Let's try not talking to them as businesses. Let's talk about how we think about how we talk to, how we communicate with them to make them understand that this affects them, even though they probably don't consider themselves to be a business. Yeah, we'll be looking at doing, radio, and really the idea being that we would like to reach out to your clients to try and so you don't have to cascade that awkward message. You can kind of, help them as they go along. So yes, fingers crossed, Richard, that there will be far more comms. Yeah.
Okay, Chris, let's turn to you on this way, because Steve's given us some really good accounts of some activities he's doing already. The vendors have a role to play here as well, don't you?
The vendors have a massive role to play, because we need to make sense of the legislation. It is complicated. We need to give clarity in terms of what bookkeepers, accountants, and as well as small business owners need to do to be compliant. But also it's building tools which actually help support the practices themselves generally, save time, create capacity. So this is a mixture of not just in terms of awareness. So if everyone wants to see my face, you can see me again next Wednesday at 12:30 on my own webinar, where I go through more pretty pictures explaining the timelines. But we're also providing consultations, collateral in terms of emails, as well as supporting advice in terms of how to segment your client base, just to get ready. And these are all, let's say, non-software driven. These are all about how to support you. So really that's what every software vendor should be doing, is being more pragmatic and thinking about what support, what ideas can we provide, what experience can we actually share? Because we've been through these huge changes in the past, whether it's been RTI, auto-enrollment, yes, MTD, VAT, but that was just, let's say, a change in approach, not really earthquake changing legislation like this is.
Thank you, Chris. Verna, last one for you.
Excuse me, Richard,
sorry, Steve.
Yeah, just very quickly, can I just endorse what Chris has said there? I actually saw the webinar that Chris and Lois put on last week. I attended that, and I'd reiterate to our members, to all members of ICB, do sign up and see it. It is excellent, and it goes through every process and the timelines. And the timelines, I think, are the most important aspect here in terms of knowing when you need to have everything in place. So yeah, I would definitely endorse it. It's well worth a watch, is that webinar.
Brilliant, thank you. Great. Thank you. And Verna, last one for you. Special one from me today. Will there be a deferral, Verna? Is this going to happen on time?
Oh, white noise, Richard.
Come on, come on.
Signal's gone. As it stands today on the 7th of September 2021, I don't know if any deferral for MTD for it. So as it stands today, it's coming in April 2023. That's probably the best I can do for you, Richard.
Brilliant. Well, let's leave it there for the time being. Thank you, Verna. Chris, are there any other resources that we can turn to after this session that might be helpful?
Yes, certainly. I suppose these things, just Google Sage MTD, and it'll hopefully take you to our sort of MTD hub, where we've got a huge amount of information about making tax digital generally, but all more specific things. So we have an MTD hub, so everything in terms of links to our webinars, our content, what we're doing on software, but more important practical things like email templates, what to send to your clients, how to inform them. So we literally got a huge amount of information just available free of charge. So just go to the site, visit regularly, get onto our newsletter, and you'll be updated every month in terms of what's happening in the market and how we're helping support you. So really, that's probably the best thing to do, and go and learn, seek, find something out new.
Brilliant. Thank you. And thank you for your time today, Chris. That's been great. Thank you again, Steve, for your contribution
sorry, Richard,
today.
can I just come in?
I'm coming to you, Jacquie.
All right.
I'm coming to you. Hang on 1 second. Thank you, Verna, once again for your candor and being support. And Jacquie, would you anything like to finish with and sign us off?
Yeah, no, what I was going to say is I'm conscious that there are a lot of questions that we haven't actually given specific answers to. What I'm going to do is I'm going to contact Chris and Steve and Verna with any of the ones that I don't know the answers to, and I'm going to cover them on Thankfully It's Friday. So if you want to join Gary and I on Friday afternoon, if you've got the time, or if not, it'll be recorded so you can watch it. I will make sure that I put the bulk of Friday into answering the rest of these questions. And of course, if necessary, Chris, I'll put the links up to your webinars. So that's all I was going to say. Sorry, Richard.
No, it was over to you to say goodbye on our behalf. So,
well, on behalf of ICB, yes, I'd like to say thank you to our guest this afternoon. It's been absolutely brilliant. These things are never long enough. We could have gone on for 2 or 3 hours probably with all the questions talking about this, but we will revisit it. Verna, I know, has agreed to come back onto ICB TV and on another Technical Tuesday so that we can put some more specific questions to her. That will be somewhere, hopefully we'll get one in before Christmas. But yeah, thank you to everybody. It's been a great session. And yeah, I will be back with everybody on Friday with some answers for you.
Brilliant. Thank you, everybody, and goodbye.
Thanks, everyone. Bye now.
Bye-bye.
Thanks. Bye-bye all.